Hi, and welcome to this episode of On the Money. First up, the federal government has frozen super contribution increases for 7 years. Employer contributions will be frozen at 9.5% until 2021, when they will increase to 10%. After that, contributions will increase by 0.5% annually until they reach 12%. If you have any questions about what this means for your super or your super payments, be sure to ask us. The ATO has released its views on the tax treatment of the online currency known as Bitcoin. It is confirmed it does not consider Bitcoin to be money or a foreign currency. Rather, it considers it to be property, so it will treat Bitcoin transactions as barter transactions, with similar consequences. If you're trading with Bitcoin, you must keep transaction records, such as the date of the transaction, the amount in Australian dollars, what the transaction was for, and who the other party was. Did you know Australians spend a whopping $8.5 billion during the festive season? To avoid a nasty financial hangover this Christmas, we suggest creating a Christmas budget well in advance. Start your gift shopping early to spread the spend over a longer period. If you're hitting the shops, consider taking cash instead of your card. That way you'll have a very physical reminder of when you're about to break your budget. A little bit of planning now can make a big difference to your bottom line in January and can leave you free to enjoy yourself this festive season. If you have an investment property, be warned. The ATO is increasing its focus on rental property deductions. The key areas it's casting an eye over include claiming rental deductions on properties that are not genuinely available for rent, or incorrectly claiming deductions for properties only available for rent for part of the year. If a property is only available for rent for part of the year, a partial deduction reflection could be available though. Ask us for assistance about your rental properties to avoid the ire of the taxman. The Minerals Resources Rent Tax has been repealed, so it's time to ensure your business is across its impact. The ATO has created a legislation tracking page where you can follow the progression of new legislation, but also follow the administrative treatment of retrospective legislation. The page explains what the responsibilities are regarding the repeal of the MRRT, including what amendments must be made to already lodged 2013-14 tax returns. If you still have questions about the repeal and what impact it might have on your business, we're happy to answer them. And lastly, nobody likes to think about it, but it's inevitable that one day you'll leave your business. Whether you're selling up, retiring, or leaving for health reasons, it's important you plan for it. A succession plan outlines who will take over your business when you leave. A good succession plan will help your business transition smoothly to the new owner. By planning your exit early, you can maximise the value of your business and help it to meet future goals. Make sure your succession plan is achievable. Set a realistic timetable and measurable milestones along the way. If you're ready to set up a succession plan, we can help. That wraps up this episode of On the Money. If you'd like further information about these or other accounting issues, we welcome your call or email. See you next time.